look, I've invested so much and where is all the money going? So you can opt for the return on premium, where after that particular period you can get that money back. Is this the right product for me? Is it covering me in times of need? Because today, let's say somebody in the family is getting admitted and the bill is 5 lakhs. Classic example is during floods, the first thing that gets affected is your engine. The engine goes for a toss. You are going to pay nothing less than 60,000 to a lakh for an engine replacement. So this is penny wise, pound foolish, I would say.
For everyone who wants to buy a life insurance plan, you might be wondering, should I buy a pure term policy, or should I buy something that gives me a return on premium, or should I buy a ULIP? For many people, ULIP is something that is pushed by their life insurance agent. So do you buy a ULIP? If you see, the smart investors don't always prefer a ULIP. They would prefer to invest directly in a market, either by stocks or by mutual funds. So let's look at first how much ULIPs people are buying in India. ULIPs form about 21% of total life insurance sales in India. And for some private insurers, they form about 85% of new business premium that's coming in. So the attractive points to buying ULIPs would be, today the charges are between 1 to 2.25%, and there is also partial withdrawal after a 5-year lock-in. So these are the benefits. But if you look at the cons, you can see that, like, in terms of returns, mutual funds offer 16 to 17% versus ULIPs, which offer between 10.7 to 15.7%. Now, there's also another angle you should look at. If you looked at how much you're investing, if you invested, say, 100 rupees of premium, then for a mutual fund, if you had invested 100 rupees, you would get 99% would go just in the investment. But for a ULIP, it would only be 95 rupees that's going in as investment. So obviously, this is like a drag on returns. So why don't we do a deep dive into ULIPs today?
Yes, ULIPs were a thing before the 2000s, I would say. And but it is subject to market risks, as you know. So 2000 saw a boom in the stock exchange and how things were booming there. And 2008, the crash in the stock market caused a lot of panic with regard to ULIP, because it's subject to market risk. So people lost their principal also invested there. So that caused a bit of a shake, because people are very attached to their money, right? So, but then when you look at how IRDA, which is the insurance regulator in the country, it became IRDAI in 1999. So they started bringing a lot of I would say acts in order to protect the customers' interest, because that was very crucial to win back the trust of people in the insurance industry. So if you look at the Consumer Protection Act, and then you have a Policyholder Act, today you have Ombudsman, you have the Consumer Forum. So people can go there with their concerns, and I would say 98% of the time it is awarded in favor of the customer. So this was a major step taken by IRDA, and ULIP started fading off because the trend kind of switched to mutual funds, and people started venturing into that along with other insurance products. So that is how I think, being very open and subject to market risks, that was a big challenge for people to trust with.
2008, when I worked at a insurance magazine, I was told, don't buy ULIPs, just buy a term product. If your goal is to protect your family, just buy a pure term life plan. So do you think that advice still holds good today?
Absolutely. I would any day recommend definitely a term life plan along with whatever other investment you want, because see, if you look at term life, I would broadly classify them into two. One is a pure term life, and other is a return of premium. So if you're going with a traditional plan, it's like once the insured passes away, it could be due to death, illness, accident, whatever you call it, the nominee, as per insurance parlance, gets the benefit of that policy. But if you're looking at return of premium, because today there is a longevity, because there is a lot of medical facilities available, so people are living longer with ailments. So if you look at that point of view, where people say that, let's say I'm having a term life until the age of 70, and I'm crossing the age of 70, and then I come and ask you, look, I've invested so much, and where is all the money going? So you can opt for the return on premium, where after that particular period you can get that money back from the insurance company. So both options are there, but definitely term life I would recommend for people to start very young. In fact, I would say anyone who becomes a major at the age of 18 should start with 3 major policies. One is their medical cover for the medical health, and definitely term life, and your personal accident policy. These three are a must for youngsters to have. The first primary idea is to understand what the consumer's life goals are. So what is it that you want to do? Like, there are a lot of people who say today the trend is, I want to retire by 45. So I have to customize a plan where I ensure that he is paying larger premiums in a shorter span of time. So by the time he retires, he has the kind of cover and money that he needs. So it is very, very imperative that you customize insurance products today, not just buy something off the shelf. And yes, it is a push model still, because insurance does work on a concept of fear, because if you say like go to a temple and you're going to find peace, you're not really going to do that. But if you scare them with saying if you don't go this will happen, so somewhere largely the consumer's mindset is tapped like that. But I would still say it is a necessary thing for us to try to get them have some policy rather than nothing. So I wanted to touch on the personal accident policy. That's something you can have any number of personal accident policies, and that's the only policy that is globally accepted. So even if I were to have a personal accident somewhere during my trip, my policy will still pay for me. And you have a lot of banks today offering you excellent personal accident policies, and also insurance companies. I just take an example of State Bank of India. They have a policy called PI, Personal Accident Insurance, which is exclusively for State Bank account holders. So for a 20 lakh cover, you pay just 2,000. For a 10 lakh cover, you pay just 1,000. So that's an amazing personal accident cover to have, because today everybody is on the move. And let me tell you, Tamil Nadu is one of the highest, accident prone states in terms of two-wheeler accidents.
COVID was a reality shock for many of us. We were all worried about our loved ones, and we all worried about having to take them to the hospital, and we also worried about whether we could pay their bills. Today, if you see, medical inflation in India is one of the highest in Asia. Year on year, it is growing 18%. And if you see, a simple procedure like angioplasty would cost between 1 to 2.5 lakh in 2018. Today, it costs as much as 3 lakhs in 2024. And by 2030, the projections are that it could be anywhere between 6 to 7 lakhs. And for more complicated procedures like a lung transplant or heart surgery, it could go up to 25 to 30 lakh. So today, are you sufficiently insured? There are government schemes like Ayushman Bharat and Pradhan Mantri Suraksha Bhima Yojana, and there's also the state health insurance schemes, but these may not prove sufficient. If you see, premiums have gone up in the last few years. For normal citizens, it's between 10 to 15%, and for senior citizens, it has gone up as much as 30 to 100% increase on their premium. So what do you do? So let's do a deep dive into what health insurance means for us today in India.
If I have a medical insurance and I go and get admitted in a hospital, there are consumables which are not paid, like the gloves, cotton, the COVID time, there was the PPI kit, which is all not covered in your insurance policy. But when you analyze policies available in the market by the top insurers in that category, I found out there were companies who were paying for the consumables. There is something called a claim protect. Like I claim this year, there is a no claim bonus, right? But if I avail a claim protect, then the no claim bonus does not change the next year. So all of this is available. So you either do the research on your own, study it on the, spend some time on Google and do the study, or come to professional advisors, and you have to also question them ki, is this the right product for me? Is it covering me in times of need? Because today, let's say somebody in the family is getting admitted and the bill is 5 lakhs, and then there is a 10% deductible or there is a copay, and then you have to end up paying a 1.5 lakh or 2 lakhs from that. Again, it's going to be a sudden expense on you. So all of the, there are policies which have no copay, 100% paid by the insurance company. So just do a little bit of scouting around on Google, you will find all those companies who offer you those kind of products, or ask an advisor, whichever suits you the best.
Okay. So have you seen a spurt in growth because of external factors like COVID or life expectancy or, chronic lifestyle conditions going up?
Yeah. So during COVID, at that point, we did see a lot of people opting for insurance, because government had also come up with schemes like Arogya Sanjeevani at that point. So at that point they did, but once the catastrophe is over, pandemic is over, people go back to their shells. So this, I would say, is applicable even in the motor industry. When we saw the floods, the Varda, Puyal and all of that, anytime during the floods, you see people still don't know the importance of having adequate insurance. People were rendered homeless, their vehicles had gone for loss. The premiums after COVID shot up almost 3 times. So still largely it becomes inaccessible for people, because 33% of India is still below poverty line. That is what the current statistics say, which means there are people earning less than 15,000 a month. So the scope of trying to invest in insurance is still a thought of luxury for them, because beyond their minimal expenses, day-to-day expenses, their commitments, insurance still seems to them like it's not in my reach. But I must congratulate the government, because they have come up with a lot of insurance schemes, which again I feel lack awareness. For example, the Pradhan Mantri Suraksha Bhima Yojana, the government has issued life policy as well as personal accident policy, as low as premium of 436 rupees a year for life and 20 rupees a year for personal accident. So anybody who's got a bank account can avail this, but again, awareness. For example, the life policy that they have, or the personal accident, let me take the personal accident, they're paying 20 rupees. If in case of death, the family gets 2 lakhs, and in case of a permanent disability, you get 1 lakh from the government. So these are, and then you have Ayushman Bharat and Ayushman Yojana, which is again giving a 5 lakh insurance cover for a family, and Ayushman Bharat is for people over 70, you get a 5 lakh cover. So these are all amazing, policies brought out by the government, which needs more awareness for people to avail.
Sure. And what about the state health insurance schemes like Tamil Nadu's own?
Yes, all of it is, see, I think each place it's a responsibility of both hands. I was trying to drive insurance for auto drivers in the Chennai city, along with the Chennai city traffic police, because we felt that they were always at risk, plying on the roads, and how could we secure their families. So what they need to basically look at is, if you look at a life insurance, you should have a cover for at least 10 times your CTC. That's a basic. So a lot of people say, I have a 1 crore, I have a 2 crore. No, that's not sufficient. You need to multiply it 10 times to your current CTC to actually help you when you retire, right? That's one. And medical, again, largely what I find today, it's a bane, I will say. People are, whenever we approach them, sir, do you have a medical insurance? My company is covering me for it. It's a very, very big, misleading factor, because once you move out of the company, there is no assurance the next company is going to give you a medical cover. Let's say you move out at the age of 45, or you want to venture on your own, become an entrepreneur at the age of 45, and if you already are diabetic, you're not going to get a policy. If you've been diabetic for over 5 years, then they don't give you a policy these days. And today, diabetes is there from people from the age of 25. So that's why we say start young when you're healthy. And like, for example, I've been with corporates for 15 years. My company covers all my medical insurance, but I always ensure I have a parallel personal medical insurance running with this. It's very, very crucial, and that's something I want to definitely drive through this program to youngsters, to have a parallel medical insurance running along with what the company is offering. Because once you're out, because today attrition, you're fired, the company is, going bankrupt, you don't have a job the next day, you definitely, and I'm telling you, health costs in the last 3 years have risen, sorry, in the last 7 years at least, it's risen 3 times. So today, if you're going to get admitted for a couple of days, you're not going to come out with less than a lakh. And it's very, very important to see whether you are adequately insured. A lot of people are underinsured. They say, I have a 2 lakh cover, I have a 5 lakh cover. It's not going to serve any purpose. You have to see whether you're adequately covered.
And when I was working on a story on general insurance, like where bank employees were protesting the fact that they were going to lose out, someone in the industry told me that it's possible to port even your group mediclaim into a personal plan for yourself.
It's a matter of awareness. And secondly, not every corporate gives you the option of porting it to an individual policy. It depends on how the corporate is wording that policy at the time of taking a group mediclaim. Very large corporates give you an option, when you move out, you can port it, but not every corporate does that. So again, that's something you need to check with your HR where you're working, whether there is a portability option. And even in the retail policy, we used to have portability until COVID. Now after COVID, people are not allowing portability, because it's largely impacting the new company, because when you do a portability, you have crossed the waiting period, right? So when you go to a new company and then you're suddenly claiming, the new company is bound to pay you because you have crossed a waiting period. So they will go into a loss. So portability is not favored today in the market. Lot of catches have come because of these malpractices, I would say.
Motor insurance for many of us today is a regulatory tick box. We don't want to be caught by the police on the roads, and that's why we buy insurance. But do you know that the insurance that you buy out of compulsion is only third-party insurance, and the insurance you would actually need to buy is own damage when there is damage to your vehicle, and you need to buy a personal accident plan for yourself in case something happens to you.
See, where motor is concerned, I think you have to listen to what they're trying to sell at the dealer point. It's very, very crucial, because largely in the first year when you're buying a vehicle, you have availed a loan, your insurance and costs are covered in it. But when the challenge we find is in the first year renewal. When I'm going to renew my policy the first year, that's when I'm looking at how much is my premium going to cost. And people go to online web aggregators and say, compare and say they are very less, they are very cheap there. No, but what I would suggest is, when you take a vehicle, the most important component is your engine, right? So I'll give you a very classic example of, and coming to a third party, I'll touch that point again. Classic example is during floods, the first thing that gets affected is your engine. Okay, and when we try to sell a product to the customer in the second year, third year, fourth year renewal, we always insist they take a engine protect cover. They're going to probably pay an additional 3,000, 4,000 rupees, but the customer says no, no, the premium is too high. I don't want the engine protect. Now, when a flash flood happens, the engine goes for a toss. You are going to pay nothing less than 60,000 to a lakh for an engine replacement. So this is penny wise pound foolish, I would say. You're trying to cut costs here, but you're ending up, because see, today there are so many untoward incidents. Nothing is predictable. Look at the Fulmama attack and then look at the Air India crash. So many youngsters have died. Now, if you don't have an insurance cover, there could be youngsters who say, look, I'm 20, I have no commitments. Why do I need a cover? Your parents have paid for your education loan, right? I'm putting a very, very blatant fact here. Even if I were to die at the age of 20, there's a huge loan on my father who's trying to make me, educated. And today children are opting for abroad education. So this amount, if something untoward to happen, could help your father settle your loans when you're not there. So it's all interconnected. A proper financial planning is very, very crucial. Coming to third party, yes, third party is absolutely essential. If you have to take a vehicle out on the road, it is mandatory. So it's against the Motor Act if you don't have a third party. Now, a lot of people, again, during COVID, we had this challenge. People were not renewing the comprehensive insurance. They said, we are not taking our vehicle outside. Why should I pay for the own damage premium? Now, what if a tree branch falls on your car and it damages your windshield? Then you're not covered. See, these are all things we don't want to anticipate. Largely, in my experience, Rachel, people say, this won't happen to me.
Okay.
That's the fact. If it happens to your neighbor and you try to educate them, it happened to him, it's his karma, it won't happen to me. So, unless it happens to them, they don't realize what they have missed. See, these are all definitely investments you have to make. It's a chance. I may never use, like, I have a policy for the last 13 years medical insurance, never claimed. But what if something untoward to happen? At that point, I can't go around looking for 10 lakhs, 15 lakhs. So that's a speculation you have to, make in order to safeguard yourself and your family.
And also, can you touch on pre-existing diseases?
Yes.
Because many people want to say that I have nothing wrong, but actually it could work against them.
In fact, I had a classic case where a friend of mine was holding a policy for 17 years and 15 years, and then he ported to a company because of our recommendation. But unfortunately, there was a small health condition which he did not declare at the time of portability. And his policy was completely repudiated at the time of a small claim. It was just a 45,000 claim. But there it was like misrepresentation of facts. You have not stated the facts completely. And they were able to fetch the history because the moment they go back to where the policy was earlier, they were able to fetch the history. But the customer didn't do it deliberately. It was just that, oversight. But after 17 years, the policy was repeated. So companies are very strict in terms of however honest you can be at the time of taking a policy works best for you.
Right.
So you have to declare even the smallest of thing. You have an eye problem or you have a congenital condition from birth, anything, even the slightest thing which you feel is not important, but insurance will look at it as a very, very important point. But I would still suggest, Rachel, as a closing point, start when you are 18. Because when you're young, your BMI is low, you're not overweight, you're not under stress, all your body parameters are still under control. Today, I'll tell you, 25 upwards, people do have other lifestyle challenges, they go get into other habits. All of that will, even in your term life, you can, if you're an alcoholic, you're a smoker, you can get insurance with a loading again. So, start early so that you cross all those waiting periods and you are, safe.
Okay. Thank you so much, ma'am. That was
Thank
like a
you.
wonderful interview, and I hope our viewers learned a lot. So
Absolutely.
thank you so much.
Thank you so much.